the last few years, as good as Bitcoin was in dollar terms, it was even better in yen terms. If you're a Japanese person holding Bitcoin, you're like a king or a queen relative to what most people around you are experiencing. If we get that other type of rotation, you could have a similar thing. So I'm quite bullish on Bitcoin. With, I guess, the shortest time frame I give is maybe 2 years. I'm saying, okay, I'm bullish on Bitcoin with a 2-year view. But more realistically, I look out several years and say, well, I think global liquidity is going to be higher years from now. I think Bitcoin's going to be higher.
On Sunday, Bitcoin's price experienced a significant drop, first falling below $60,000 and then briefly hitting $58,300. Earlier in the day, the total value of the cryptocurrency market declined to $2.06 trillion, marking a 3.18% reduction within just 24 hours. During the same period, Bitcoin's value fell by 3.8%. This market volatility has elicited a range of reactions among crypto enthusiasts. In an interview with podcaster Peter McCormick, investment expert Lyn Alden discussed the volatility, liquidity, and the role of Bitcoin in times of crisis. She emphasized Bitcoin's long-term potential as a solution rather than merely a form of protection. Alden highlighted how minor events, such as a slight increase in train fares in China, can expose deeper societal discontent, leading to widespread protests. Alden drew parallels to the US, the UK, and other parts of Europe, where people's discretionary income has stagnated or declined over the past decade, fostering a sense of economic insecurity. She suggested that Bitcoin's potential lies in addressing these underlying issues rather than just serving as a hedge against economic turmoil. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Some years ago in Chile, they had massive protests. They were the trigger was basically like train prices went up by like a nickel.
I was there.
But of course, yeah. So you were okay. So it wasn't the nickel.
Yeah.
It wasn't the nickel that did it. The nickel was this catalyst for accumulated frustrations that people had, and that's, I think, what we're seeing now in some developed countries. We're seeing it in the United States. We're seeing it in the UK. We're seeing it in parts of continental Europe, and basically, there was this chart I saw. It was Michael Green that shared it. Basically, it's like it was America, but it was like real disposable income after shelter, food, transportation, and all this. And it shows that ever since about the past 10 years or so, it's been going kind of sideways to down. Most people's everyday experience of affordability and quality of life it went from structurally improving to not really doing great. In addition, in the United States, it's kind of the first period of time where life expectancy is actually going down to some extent, which is a really bad sign. UK is in a similar position to the US, where you have trade deficits. So you've had a little bit of hollowing out of your industrial base, which you've kind of observed that as well. It's just kind of like industrial towns on harder time, working class. So it's a similar position as the United States, and so people increasingly sense that something's wrong. They're not really sure what it is. They're not really sure what mechanisms are there. And then you get more distrust in institutions. So both the US and the UK and elsewhere, people that say, I think government's doing a good job, or I think the media is doing fair reporting, or I trust medical authorities, or I trust, whatever the case may be, across the board, that trust is generally declining to fairly very low levels. More polarization, more frustration build up, economic frustration, and then you have very real policies that do people do have, say, rightly criticism of, like how immigration's good, but if you immigrate a ton of people all at once and there's a lack of assimilation, people can, I think, rightfully get concerned about that to some extent, and of course it can be taken out in harmful ways. But then people start debating, well, what's going on socially while all these other economic things are happening, and then people can unfortunately take it out in violence and hate when it's some of these problems are very hard to solve. And I tie a lot of it back to broken money, not everything. But if you kind of catalog over time, over decades, as a species, we consume more energy per capita, so that's good. Our technology is way better than it was years ago. Some of it's actually got harmful effects, but either way, we at least have better technology than we once did. But our money's like worse than it was
Mm.
a while ago, especially if you're outside of these major countries. But in general, money's bad. It's like that one area where technology's not really made it better. Um, and it causes all these imbalances and all these one part of the economy gets hollowed out, and this other thing has like this unfair advantage, and then it kind of rotates, and people these big forces happen around them, and they don't really know how to frame it, how to contextualize it. It's much harder to have debates over fiscal policy than it is to have over social war stuff. So when the fiscal policy or just the overall economic situation, when that gets messier, fewer people are able to articulate it. And so they articulate it in more visible ways, more social ways. That's where a lot of that anger gets expressed a lot of the time. Again, there's a lot of, it's broken money. I also think it's broken energy policy, right? That, a number of countries have not managed their energy well. They get into this like mindset that like the only thing matters is say carbon emissions, right? They try to quantify everything by one number. Most people, if you ask, do you want to keep the environment healthy around you? Do you want to have clean air and fresh water? And of course, but then so many politicians put it into one number, and then they'll base all this energy policy around one number. At the end of the day, if people, if their energy costs are going up, if their real standard of living is running into frictions, that's when they're willing to take it out.
According to Lyn Alden, Bitcoin is a reliable option during times of crisis due to its around-the-clock liquidity. However, its price is volatile, and its perceived risk is not always clear, given that Bitcoin is still relatively new with limited market understanding. Alden noted that Bitcoin's value often rises during crises, although this depends on the nature of the crisis. Alden differentiated between crises that either support or undermine liquidity, explaining that most crises tend to negatively impact liquidity, leading to an initial sell-off of Bitcoin. She cited the 2023 American regional bank crisis as an example of a pro-liquidity event where Bitcoin performed well after the initial shock. Alden emphasized that Bitcoin should be evaluated over a 4-year period, considering it a long-term investment solution rather than just a hedge. Additionally, she mentioned that Bitcoin's value can vary depending on the currency, with Japanese investors, for instance, benefiting from its appreciation relative to the yen. Let's return to the interview for more insights from Lyn Alden.
One is, Bitcoin provides 24/7 liquidity. So on a Sunday night in America time, while Japanese Monday morning, while they're blowing up, the safety option is that if you hold Bitcoin, you have 24/7 liquidity if you need it or want it, which you don't have with almost any other asset. The downside is in terms of price, it's not great for those that are still holding. It is good for those that like to buy dips. I generally don't view Bitcoin as being a risk off asset in the way that that portfolio people would think about it, meaning that price normally goes up during crises, because it's still not well understood. It's still it's just sometimes there's leverage in the space. One thing I point out is that there's like pro liquidity crises, and then there's anti liquidity crises. Most crises are anti liquidity, which is to say that Bitcoin's biggest correlation from what I found is liquidity. And when a crisis breaks out, normally it's not good for liquidity. And so Bitcoin is going to be one of the first things sold, especially because it's like that phrase, you sell what you have to, not what you want to, especially if we're talking about a 24/7 market on a weekend. As long as Bitcoin has upward volatility, which we want it to have because we want it to get much larger, that's going to come with periods of downside volatility. And then as long as it has both upside and downside volatility in large amounts, people are going to often treat it like a risk asset until it kind of reaches some much larger, more distributed, steady state, or at least like kind of gold-like in size. An example of a pro liquidity crisis was ironically the 2023 American regional bank crisis. So Bitcoin performed poorly in say late February and early March because that's where actually liquidity was worsening under the surface. But when the crisis actually hit, Bitcoin did well. And that's because the market immediately realized, okay, the Fed and Treasury are going to provide liquidity. Things broke, and they kind of knew that that's something they had to respond to, and they did. And so Bitcoin did quite well after some hours. It actually did quite well pretty quickly because that was a pro liquidity crisis. Things like the COVID crash or things like this dislocation we just saw. These are generally anti liquidity events. So we should not expect Bitcoin to do particularly well during them. It still serves its function of giving people 24/7 liquidity should they need it or want it. But I think it's more like, and I think Parker Lewis has said this, it's not a hedge, it's a solution in the sense that this is an alternative system that's being built. And so I wouldn't think of Bitcoin in anything less than like 4-year increments, because it's a structural, as long as the thesis is correct, it's a structural growth story, but one that is likely to be sold during most negative liquidity crises.
So you're buying for problems 4 years down the line.
Yeah, and you're buying a solution for, like, if money's broken, you buy the least broken money, buy the good money. You try to build systems. Like when people ask me, "What do you think about this recent Bitcoin price drop?" and like my answer is like, I hold keys in geographically separated areas. I invest in venture, with Ego Death Capital for like decade long, like intended timelines. It's that's the kind of the time frame I'm thinking of when it comes to Bitcoin. And I generally warn that in any sort of intermediate term sense, Bitcoin is highly correlated with liquidity, does not do well usually during bad liquidity environments. The last few years, as good as Bitcoin was in dollar terms, it was even better in yen terms. If you're a Japanese person holding Bitcoin, you're like a king or a queen relative to what most people around you are experiencing. If we get that other type of rotation, you could have a similar thing. So I'm quite bullish on Bitcoin with, I guess the shortest time frame I give is maybe 2 years. I'm saying, okay, I'm bullish on Bitcoin with a 2-year view. But more realistically, I look out several years and say, well, I think global liquidity is going to be higher years from now. I think Bitcoin's going to be higher. But I don't expect it to be a risk off play in the price sense, unless a particular crisis happens to be one of the fairly uncommon pro liquidity crises.
Although global cryptocurrency trading volume increased by 7.53% from the previous day, it remained below the levels seen the week before. With the recent decline, Bitcoin's value relative to the US dollar has dropped by 13.9% over the past 2 weeks. Ethereum also experienced a downturn, falling from $2,720 to $2,540. Other popular cryptocurrencies, such as Solana, XRP, and Toncoin, saw significant losses ranging from 5.73% to 7.5%. Many traders faced substantial losses in the cryptocurrency futures markets, with a total of $32.49 million lost as 54,714 positions were liquidated. Traders betting on rising prices accounted for $102.33 million of the losses, mostly due to long positions. Of these, $25.95 million came from Bitcoin trades, while $22.8 million were from Ethereum positions. On Sunday, long liquidations in Solana amounted to $8.37 million, with the largest loss occurring on OKX, where an Ethereum deal resulted in a $2.17 million loss. The challenging conditions for traders were driven by the volatile market and increased selling pressure. Lyn Alden pointed out that rising public divisiveness, frustration, and distrust in institutions are rooted in what she calls broken money, a financial system that hasn't kept pace with technological advancements. Alden also criticized flawed energy policies that focus on single metrics like carbon emissions, arguing that these could lead to higher energy costs, lower living standards, and increased public unrest. The pressing question now is what is driving the recent volatility in the cryptocurrency market and how it will affect the future of Bitcoin and other digital assets. Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.